But I mean, I can like look at another dude and be like, yeah, all right, that's a good looking, healthy guy right there. Stephanie's always like, what are you doing? Like, look at that complexion, it's flawless or whatever the thing is. I can't. Would I call another man hot? I might say he's stereotypically hot, but I would not go, damn, he's hot. No. I've said often, like, that's a good-looking dude right there, Now, that's like childish. Hey, there you go. It's a good-looking dude. Now, God forbid you say, a good-looking woman over there. You're done. That's probably why I do it in front of the missus, good-looking dude. And she's like, yeah. Just so that one time that I say, wow, I'm not in trouble. Hey, welcome to Closing Beat, everybody. Happy Wednesday. How you doing out there? We have, I don't know what the deal is with the lights today, but we're going to go with it. Welcome to our show. Hope you're having a good day out there. And we talk about the stock market. We're financial advisors. You guys get the gist of what we do here, right? Do I have to say that every day? I appreciate you guys hanging out with us here. And we're going to dive into it here. We've got some interesting things to talk about. If you look at the stock market on the right-hand side of your page today, the rally that did not reverse itself. Take a look. So yesterday we had that move higher, basically through the first really short part of the day, and then it just faded all day long. Today was another attempt, but like I was saying in the office trades earlier, this was a little more timid, broad-based, so no complaints there, but it's a little more timid, and that's rightfully so. You have people that think like, all right, maybe this is the little bounce area here, and other people are going to just shake it off and assume that we fail again. But a little timidness there, otherwise a good day, right? Close nearing highs of the day. This is the S&P right here. If you look around the S&P, you got more participation from the names that have been weak. We talked about how a lot of these were getting sold off, and so even just a little bounce would be enough to get the markets higher. Microsoft being one of them. NVIDIA finally giving you at least a little bit of a bounce there. Some of the other names like QCOM moving along. Apple got a little bounce today. Amazon, that was a good one, up 3% on the day. And those 1, 2, 3, 4, 5, 6 stocks or so combined add up to enough weight to hold the stock market higher. But normally I would say, okay, well, it's just because of those stocks. I can't say that today. You had MasterCard higher on the day. I'm going to bounce around to some different areas. Walmart going back almost to all new highs there. Sticking in retail, you got Costco. I did mention Tesla. If not, you got Tesla in there. Nike also higher. You could look at Allergent. You could look at Boeing. A lot of stuff was green. In the healthcare space, the only things that were a little bit red today, Eli Lilly, because that's a bit extended. AbbVie was pulling back from its being recently extended. JP Morgan was lower. That's earnings related. Truist Financial. Anything financials, a little bit mixed today, whether you're looking at the insurers, they're kind of pulling back off of their highs. And so not too bad. I mean, across the board, not looking too bad. Utilities were weak as a whole, which they kind of deserve to be. They've had a good run. They can take a little bit of a break here. Nobody cares. Waste management was one that pulled back, but these are all pretty minor pullbacks in an otherwise very strong market. So I do not have much negative to say there. So the S&P gives you about 1% on the day, slow grinder all day long. Russell 2000 was a little bit better of a performer, and is it just a choppy mess? I don't know, right? Like if you're looking to get into small caps, like I like looking at small caps, so the whole space is just a spread out hot mess. It's like somebody dropped a boulder in a pool and the water's going every direction. You have no idea what's going on. That's a tough place to be if you're not stock picking or whatever. The NASDAQ gave you a little rally. That's going to be because of the tech stocks and semiconductors. I'll use the SMH to show you guys today. SMH giving you a little bit of a rally, or AMDs, microchips, ADIs, QCOM, Texas Instruments, Broadcom, Xilinx, that's no longer. Also higher on the day. So tech and semiconductors did the trick there. And in the Dow, you got about a 1% gain. If you're looking, Boeing was one of the big contributors. I mentioned that one already. It was up about 4%. I don't know if that's the low there. Boeing has been a very tough on a technical basis to figure out. You got to just almost close your eyes and say that's discounted. So that's that. If we move on down the line here, you got gold just up a little bit more today, continuing its week-long rally here so far. Oil reversing course from really early this morning, had the oil inventory numbers come out, and that pretty much sold the low for the day. And you got about 3.5% gain there. Sorry for your gas prices there. Bitcoin closes up an even 2,000 points. That puts it at 41,290, trying to come off lows. It's the same as the market right now, right? It's not a hedge against the market or anything. It's performing exactly like the market, which is a good sign if you like the fact that it's correlated. Volatility fell a little bit on the day. I don't often touch on that one, but it's cooling off, right? So if you look at the S&P 500, this monster nastiness, all this back and forth, well, in a really short term here, just over the last week or so, you're getting squished days, meaning less wide range days, tighter ranges throughout the day between the highs and the lows. So it's kind of fun to watch. Now, I like to watch everything, and so I really do. And I've been commenting a lot about how the Fed is signaling these rate hikes here, and maybe a 50 basis point rate hike. And I thought, I might have sounded too bearish, right? And why should you take my word for it? Let's do a little homework and actually prove it to you, or at least give you something to look at. So here we go. This is every single, what I did is I went through every single Fed member who has spoken this month already. I highlighted if they were a voter or not for you. And then I gave you one of the key quotes, or at least what I thought was the key quote as to where they stand in any one of their speeches or conferences that they've done. Yes, I did it. And then I basically wrote a little summary of what kind of happened throughout the speech that just gives you the gist of it, right? So starting here, April 1st, Evans, he says monetary policy is not on a preset course. In other words, we could change our minds at any time. That's not helpful. You got Fed President Williams over here, who is a voter. He said the Fed can start to roll off assets as soon as they may like to, or as soon as the May meeting. Now we know they got a little bit of ahead of that. They did mention that already. Here's what I want to point out. You got a case for 50 basis point hikes in May. That has grown, they're saying. Inflation is as harmful as not having a job. I don't agree with that, but that's what they said, Daly said, and this was two different conferences they had. You got George here says, we may have to go above neutral to bring inflation down. In other words, we may have to overshoot our rate hiking there. Inflation is very high. Getting it down is a top Fed task. So they want to be aggressive there. This is the FOMC minutes that came out. We already talked about that. Here you go. Barkin says we're 9 or 10 hikes away from the neutral rate, which 9 or 10 hikes puts you over 2.5%, right? Well over 2.5%. You got Harker saying, I'm accurately concerned inflation is far too high. So when they say the Fed is signaling, these are the actual words that they've been using here. The Fed hikes, waning fiscal policy, we'll see demand ease, meaning in the economy, people's demand for going out there and spending all kinds of money will die, or ease. Current Fed policy is too low by about 300 basis points. That's 3%, meaning the target funds rate, assuming the low end of the rate here, should be 3%. And then the most recent one that I had access to, Mester, Loretta Mester says, I'm pretty optimistic. She just was like, this is great. Everything's good. We're going to be able to raise rates. Everything's going to be happy. I then put a whole bunch of stuff over there that you could screenshot if you'd like to see the summary of everything that they said, really briefly, but hope that helps. I'll also have Cody put it in the research site if you want to do that as well. And Cody just found out he's going to have to do that, so give him a minute to do that. But I just thought, I have nothing else to do. Let's read all of this. And I only went back to the beginning of the month because I really didn't have nothing to do, but I wanted to do it for you there. The bottom line is the Fed is very likely going to meet in May, especially with this new inflation number, and say, we can raise 50 basis points or 0.5%, which would be a 2-hike meeting. That's how they'll word it. And you might expect that there could be even more of that going down the road, especially if inflation stays high. Remember, they will not see a new inflation report until after they make their decision in the May meeting. So all signs basically point to a 0.5-point rate hike by the Fed. Now, you have bonds actually taking a bit of a break, yields actually falling a little bit after severely pulling back here. This would be true for the TLT as well. I know I'm rambling a little bit, but TLT had a decent day as well and is trying to bounce back. We went over the stats. If you want to know how often that actually happens, we covered that yesterday. And now we can move on to maybe some of the sectors here. We'll do like a brief rundown of the sectors. So Here you go. The only sector that's in a downtrend still is the communication services sector. Every other sector is at least neutral, chopping sideways and or moving higher. Uptrending sectors continue to be consumer staples. That has been all the excitement lately, even outside of energy, which is another uptrending sector. And utilities has been is the third, and there's only three sectors that are trending higher. The most overbought sectors at the moment, if you're curious, relative to each other, I should say, is consumer staples. You got energy as well. You got healthcare now in the short term, but that's already kind of started to pull back. You have basic materials, which is also kind of shook off a little bit of that, and utilities, right? Inside of inside of consumer staples, which is one of the more overbought areas there, one of the most overbought stocks is Altria. So comparing all of them to each other. Hershey is also one of the three top overbought stocks, and Coca-Cola would be the third. So there gives you a little bit of an idea of what's going on. In the energy space, that is also an overbought sector. Three stocks. You got Hess, which is the most overbought stock. Williams & Co., that is the second, and EOG Resources is the third. And it was tough to find a third because you can see that's not super overbought there. What else do we have? As far as the number of stocks in or over the 50-day moving average, the blue line there, the tech sector currently has the least amount of them. I use the XLK for this. Only 24% of all stocks in the tech sector are above the 50-period moving average, which is pretty tough, but not too far away from consumer discretionary, which has only 25%, and communication services, which has almost 26% of stocks above the 50-day, the blue line. The rest do not. As far as dividend yields, we'll cover that as well. The highest dividend sector at the moment is energy, just over 3%. Second place comes utilities, 2.8%. Real estate is in third place with 2.6%. And consumer staples is in fourth place, 2.43%. The worst sector for getting a dividend yield at the moment is consumer discretionary, followed by tech, right? And tech normally doesn't pay a whole lot anyways. So that'd give you an idea there. Hope that helps. That's a different way of looking at it, isn't it? Kind of something different to look at sector-wise. Maybe not. I don't know. You tell me. All right, what else do we have here? As far as the office trades today, it was a good day for the office trades account. Let's go over what we did here. And not to make it all pretty, we took a loss, right? What was it, $35 or $60 or so was the total loss. Very small loss on Iron Mountain. We had a short position and realized it's not going down. This thing was going sideways. I was worried about that continuing higher, so we took it off for a small loss. Restoration Hardware is the earnings play that Cody made some money on. I made some money on after taking over his trade there. Closed that one out today for a nice profit. Speaking of earnings plays, Cody is taking a shot on Ally for earnings there. We'll see what happens tomorrow. I chose to add Truist into the mix there. And on Netflix later in the day, we had a strangle on this one. I just chose to close the call side of the strangle because we were up like 90% of the profits there. So now, essentially, we are just long Netflix. Also tried to put an order in to close out the transports, IYT, and that did not get filled because I put it lower just thinking, well, hey, if this is rallying, maybe I'm not going to be around and maybe it rallies up and I can just take the profit. Did not, so we still have that position there. But otherwise, pretty active day considering the market was pretty active, right? I mean, it was a pretty good day for a bounce. We'll see what tomorrow has in store. Okay, going on over to new highs and lows for the day. There were 20 new highs. It was a broader mix today. So in the new highs list, you had staples, utilities, materials, energy, and healthcare. Whereas lately we've been seeing only consumer staples. It's been Hershey, right? Or it's been, what was it, Coca-Cola, right? So it was a little bit better of a mix here today. Devon Energy is one that hit new highs. That's that breakout from the other day we were talking about, yesterday actually. It did attempt to start breaking out today, so that's one. Grainger Worldwide, same thing. Got a series of highs here. It is trying to trade above that. Will it gain the strength or will it not? U.S. Bank was one of the new lows. The new lows today were mostly financials because they were already kind of right there anyways. the ones that were close to 52-week lows anyways. So you had US Bank. It is very extended here in the short term. You had JP Morgan. That's earnings related. The gap down today pushed it into new lows. And Truist Financial, which I just mentioned a minute ago, also hit new 50, just ever so slightly, hit new 52-week lows. See right there? That would be the prior low, and it just barely broke below that. So not too bad there. As far as stocks in the news, we're jamming today, right? We are jamming along. I feel it, though. It's one of those days. Okay, PayPal. So PayPal loses their CFO. Where'd he go? Walmart. Right? I was just saying the other day, what's an innovative company? And I listed Walmart, and nobody said anything. I was impressed by that. You guys probably get it. Walmart is actually like trying to move ahead and innovate faster than maybe some of the other bigger retailers. Anyways, PayPal loses that CFO, and he's going to Walmart. He's going to be the CFO at Walmart. And obviously that was more beneficial for Walmart than PayPal. JP Morgan had earnings here. I thought this was very interesting. Give you a couple talking points for your friends. So JP Morgan's profitability slowed down a little bit because trading volume and deal volume, people buying, merging, starting new companies, doing IPOs, all of that slowed down, which means profitability was hit there. They put $900 million in credit reserves, which is basically their safety net. And their actual quote was, "The risk is to the downside." What have I been saying? The risk is to the downside. If you're excited about the market bouncing here, that's great. You can participate. Just know your risk now is to the downside more so than the upside here, if you're familiar with that. Jamie Dimon had a bunch of kind of interesting quotes there. He said, we're pretty optimistic on the economy, at least for the short term there. Everything looks good. Consumer businesses look good because remember, they can see inside your bank accounts and everything like that. But they're worried about some challenges ahead. And Jamie Dimon, I thought this was the best quote. He said, "I cannot foresee any scenario at all where you are not going to have a lot of volatility in the markets going forward." Well said, right? Remember, the last couple of weeks we've been saying, give us something. What's the reason why the market should go higher? He sees no reason at all. His actual quotes there. So, me and him are on the same page, just doing that there. They're also working on real-time payments. I don't know if you know this, but JP Morgan is working on the ability for you. If you cash a check or send money to somebody or do an ACH, why does it got to take 2 or 3 days? They're working on real-time payments, and I believe they're partially using blockchain, at least on the wholesale side, to make this happen. They said that you see a pickup in credit card spending. You see a pickup in travel and dining. I think we can see that there. Home lending originations dropped by 37% thanks to rates there. And so that's part of the reason why you got JP Morgan a little bit lower on today. All right. What else? Where was my list there? That was them. What else do we have I'm on the stocks in the news here. All right. You got Fastenal reporting earnings there. Everything was good, right? Earnings better than expected, revenue better than expected. They don't offer guidance, so there was none of that. The stock started down just a little bit, had a great day. I mean, it's a great sign for the industrial side of things if you're familiar with or like to participate in that space. Not too bad. Delta Airlines. Delta puts up better than expected earnings there, and the guidance was actually quite strong there. They said they have a strong rebound in demand as Omicron faded there, the virus, and they got back to profitability. The month of March was profitable for them, so they have a lot of things going good for them. Strong free cash flow, and they said March was their best sales month in Delta's history, and despite offering 10% less seats. So less seats, but yet those were best sales months there. Pretty cool. They're also paying down debt. That's one of their focuses there. They currently have a net adjusted debt of $20.9 billion. They're trying to get that down to $20 billion by the end of Q2. They want it down to $15 billion by the end of 2024. And what's cool, I don't know if you care about this stuff, but so out of all that debt, what interest rate do they pay? You curious about that? Like, do they get some crazy interest rate on all this debt, or is it like too high, too low? So what they do is they call it, it's a weighted average, right? Because the debt's all over the place. So their weighted average interest rate on their debt is 4.3%. That's what they pay. So they think that's too high. take your cue from people like this. Like, the companies manage their money in a great way, obviously, because they want to grow and provide as much value as possible. Why don't you think about that with like your debts, right? We're out there spending right now. Delta's like, we're going to pay this debt down, right? We're hoping to get it down substantially. Maybe you do the same. Anyways, the stock was higher, back above the 200-day moving average, and nice and strong, right? Good stuff there. No complaints. What was the other one there? Oh, Bed Bath & Beyond. BY. There we go. Bed Bath & Beyond, a little bit weaker in terms of earnings there. So earnings missed, revenues missed. A lot of comments there, get a negative score in terms of guidance. They didn't offer guidance to the best of my knowledge there, but the stock was down quite a bit more, but only down about 1% on the day. Not too bad. Oh, BlackRock, by the way, they reported earnings. Not a big move in the stock there. They part of the reason why, so they missed on their overall sales, and part of the reason why is because the total assets under management. So if you're not familiar with this, Jazz Wealth as a company, we manage just over $200 million. And I think I'm hot stuff, right? I'm like, that's incredible. Like, to me, I find that fascinating. BlackRock manages just under $10 trillion, to give you an idea how big they are. World's largest asset manager. And so part of the reason of the weakness today is that number was 10 trillion. It just went under 10 trillion. So they saw a little bit of outflows there. $10 trillion with a T. Fascinating. Anyways, tomorrow, you've got earnings from Ally Bank, of course. You know that. You've got Citigroup coming up as well. Me and Cody are both in those plays. Goldman Sachs, Morgan Stanley, PNC, Progressive, State Street, Taiwan Semiconductors. That'll be big for semiconductors there. United Healthcare and Wells Fargo. So you got a busy day for earnings tomorrow. And they're kind of crunched in that day like that because Friday is Good Friday and the stock market is closed. So they're all going to get their reports out tomorrow. We'll take a chance here and try to answer your questions if I can, and then we'll wrap it up. Wine and Wealth tomorrow, by the way, is going to be talking about the details of taxable and non-taxable gains in your taxable accounts. We're going to go into the wash sale, of course, and specifically the details. Not the cute thing that everybody puts online, like if you buy the stock and you take a loss and then you go and buy it back, you can't take that loss. No, that's a cute first summary of how that works, but we're going to go over the details there. We'll work in how options work with all of that and all the other different great products that you could be using to help you out, right? So that'll be tomorrow in our Wine and Wealth class. Anyways, let's see what we've got here. Kirk says, sold off his taxable investment account a month ago to buy a vacation property. Well, hope it's going well. Hope you got people renting it out. Where's it at, Kirk? Tell me where. Tell me where that's at. Higher rates should calm inflation, which would be good for the economy. Well, it's not technically good. I mean, it's good for the speed of how we're, the demand of the economy. So right now, the level of demand is sort of snowballing and getting out of control. The idea is to slow that. We don't want to stop that, but the idea is to slow it down to a more normal pace. So it depends on how fast rates go up. That's the balancing act that they have. Raise rates a little bit and you weed out some of the people that would have spent a lot of money or maybe would have grown a little too far too fast. Weed out too many people and we all stop, right? And if inflation doesn't really start coming down, now what we have is, you know the word, we're not growing, the economy's not growing, but we still have higher inflation. There's a word for that. I'm sure some of you know that word. What? Oh, you don't like that page? I'll go over here for you. There you go. So there you go. Tom says, how will in the money May 20 short puts on AT&T be treated if held during the Warner Brothers spinoff there? So the option can still expire. If you're in the money, you will likely find that the other side of that position will want to exercise their right to assign you shares. So you're likely going to end up with shares pre-spinoff. Think about the other side of that trade. If you're trying to figure out, like, I'm already in the money, what's going to happen? You're likely going to end up with some shares. Yeah. Kareem says, man, do a video on teaching people how not to buy stock, especially when the entire market is a scam. That would go against everything that I believe. I do not believe the stock market is a scam. I believe there are lots of stocks that could be labeled scam. Because if you've gone 10 years and you haven't made a profit ever and you're still a publicly traded company, I think there's a part of that's a problem there. Yeah. What? Oh, there's some problems there. Am I shaking? Maybe it's because I'm like bouncing my leg around. We'll try that. That could be me. Yeah, I was just bouncing my leg around. I noticed everything was shaking, but maybe not. Maybe not. You know, it's what it is. The Fed planning to kill the market. They honestly don't care. Whatever happens will happen there, and they basically, one of them, if you read in there on that sheet that I was just sharing, said that sometimes when you make Fed decisions, there is collateral damage, and if that collateral damage is the stock market, so be it. I mean, those are rough words to be using there. Yeah. But otherwise, we'll wrap it up there. Then if it's not fixing it, maybe I messed myself up somehow. Boop, boop. I can press that button. I got no more buttons to press. I'll wrap it up there because everything seemed to be good for at least a little while there. And you guys enjoy the rest of your day. I will be back tomorrow and hopefully more clear. See ya.